Hey folks, CA Rachana Ranade here, and I welcome you all to a very important video, which is about trying to explain you why did markets fall today. I'm sure you might have read this in the news that yesterday the Fed chairman, Mr. Jerome Powell, made some statement which was not really welcomed by the market. Well, if you have been tracking the markets, the Indian markets, you might have seen that there was a sharp fall in the market in the last few days. And yesterday, in fact, if you have seen the market closing was very strong. In fact, yesterday markets almost closed at the day's high, and many people were believing that wow, such a strong closing. Today it might open up high and it might stay stronger through the day as well. And guess what? Today the markets opened almost 200 points down, and it closed even a shade below that. So why did this happen? We must understand that if the mother market, which is the US market, if something happens there, then in other markets around the world, including Indian markets, it is going to create an impact. So, yesterday, that is on Thursday, Jeremy Powell, who is the Federal Reserve's chairman, okay, he said that we are planning to move faster on raising the interest rates. Please understand, whenever US Fed chairman says that we are going to increase the interest rates, is that taken as a positive sign for the stock market or a negative sign? It is always taken as a negative sign for the stock market. Earlier, people were saying that he might propose to increase the interest rate by 25 basis points. 25 basis points means 0.25%. But yesterday, everyone, including him, was talking about increasing the interest rate by about 50 basis points. And is that a big number? The answer is yes. Okay. Of course, many experts were expecting that 50 basis points will be increased, but he also said, yes, now it is evident that we have to increase it by 50 basis points. Why he feels that this is evident? Because right now the inflation figure is almost at 8%, and originally their target was inflation of 2%. Right now it is at 8%. If they have to control the inflation, one major tool that they have to use is increasing the interest rates. Okay, now how have the interest rates been in the last 2 or 3 years? So for that, I would want to share my screen, and I would want to tell you that how US has been either increasing the rates or has been decreasing the rates. So have a look at this chart on trading economics. This is known as the United States Fed fund rates, similar to our CRR SLR thing. Okay, so now if you see here, since 2016 it was going up for a long time. It started decreasing somewhere around 2019, down in 2020. Zoop, have a look at this fall. From 20 to 22, it's almost stable at 0.25, right? And here you can see there is a slight uptick of 0.25%. In simple words, has this happened for the first time in the last 3 years that their interest rates have risen by almost 0.25%? And now it is believed that 0.25% nahi, now there are great chances that he might keep 0.5% as a benchmark. So every single time he would want to increase these interest rates with a gap of 0.5% directly, not going slowly steadily. It's like a tortoise. They're not going to increase the interest rates, they're going to act like a rabbit, maybe going on rigorously increasing the interest rates. Why? Because they want to control inflation. Now again, the economists were saying that till what level the interest rates have to go up. They are saying officials think that this rate should be around 2.4%, and this will be like neutral. Means what? Still they'll say that okay, still inflation will be kind of in control at 2.4%. So it's like a balancing act between what and what? Economic growth and inflation. They don't want to hamper the economic growth also, and they also want inflation in control. If they want to balance this, they are saying 2.4% is what they have to meet. And currently, like I showed you in the chart, currently they are just at 0.5%. So they have to jump from 0.5% to 2.4% very fast. And that is the reason why maybe the Fed chairman is saying that now we have to go at 50 basis points hike in one go. As a fast we'll have to go. Now, just for your information, the last tightening cycle means increasing in interest rates, that wherein continuous for 2 years. they were increasing the interest rates and increasing the interest rates. This happened for 2 years back to back from 2004 to 2006. So I'm again repeating this point. What happened in 2004 to 2006? In these 2 years, continuously, US was increasing these interest rates. Okay, when the inflation was somewhere around 3%, continuously from 2004 to 2006, interest rates were going up. And now understand, last grand finale, very important. The moment interest rates are going up and up and up, it's not good for the stock market. From 2004 to 6, it went up continuously, and everyone knows what happened in 2008. I'm not saying that 2008 is going to be repeated, but I am warning you, I'm cautioning you that if interest rates are going to go higher and higher, please don't expect a big rally suddenly in the market. Ideally, these macroeconomic factors say that in the coming few months, there are more chances that stock markets might remain flattish or even bearish. Okay. Now, for those who love economics, I think these sessions can be pretty interesting. And if you feel that I want to learn more and more of this, I want to understand the impact of economics on stock market, then please keep on watching our channel. And a big news coming up tomorrow, I will be launching my new course, which is Economics for Finance. The pre launch happens tomorrow. So, tomorrow at 6 p.m., you'll see our course, which is Economics for Finance, wherein I'll be teaching all these things: GDP and SLR, CRR, all lot of factors which impact the stock market. Everything is taught in detail. So, don't forget to check out my website, rachanaranade.com, tomorrow at 6 p.m. And the pre-launch offer starts tomorrow, so surely check out the website. Please let me know in the comment section if you are loving these videos wherein we discuss the current affairs and their impact on stock market. Till then, take care, jai hind, and bye bye.